Hi, I'm Jimmy Lepping, psychologist and statistician, and back with another video on financial markets, this time on the relation between stock prices and analyst price targets. Not so few people use new analyst price targets to make decisions regarding buying or selling a stock, which is based on the assumption that such price targets are a leading indicator of stock prices. In this video, we check that assumption using data from 4 stocks listed on the Dutch large cap or mid cap index from 4 different sectors: technology, healthcare, consumer discretionary, and energy, and that have followed different price trajectories in the past 12 months. This the time window is November 2022 until the close of October 2023, so 12 months basically. And the 4 stocks are ASML, a Dutch semiconductor company listed on the Dutch large cap index that is in price area currently similar to that of a year ago. Philips, as a healthcare company listed on the Dutch large cap index that is now considerably higher than a year ago. Just Eat Takeaway, a food and grocery delivery company that a year ago was listed on the Dutch large cap index but is currently listed on the Dutch mid cap index and is currently trading much lower than a year ago. And Vopak, an energy company listed on the Dutch mid cap index, which is currently trading considerably higher than a year ago. For each of these stocks, I selected the analysts that gave at least one price target in November last year, and since that month revised that price target to a higher or lower level at least once. And here you see the so-called cross-correlation function of the monthly closing price of a stock and the average analyst price target. If the assumption that price targets are predictive of where a stock price will be going, and preferably, of course, in the same direction as the analyst price targets, meaning that higher price targets predict higher stock prices and lower price targets predict lower stock prices, we should see substantial positive correlations on the right of the chart. Because on the horizontal axis of this chart, we see the number of months of lags between changes in a stock's closing price at the end of a month and the analyst price target in a given month. Substantial correlations on the left suggest that changes in the stock price lead analyst price targets instead of the other way around. And this is exactly what we see. For each of the 4 stocks, we see a peak in the correlation at lag -1, -2, or -3, and in none of the cases in positive lags, which indicates that stock price changes in a given month predict changes in analyst price targets 1, 2, or 3 months later, which adds more support to the hypothesis that analysts change their price targets based on recent changes in the stock price instead of analyst price targets predicting where the stock prices will go. And here is the picture which averages the outcomes of the 4 stocks that we saw in the previous chart. And in this chart, we even see it more clearly. The peak of the cross-correlation function is at lags -1 and -2, indicating that stock prices at the end of 1 month tend to predict quite well analyst price targets 1 or 2 months later. Moreover, we see that lags +3, +4, and +5 have negative correlations, which indicate that higher price targets higher analyst price targets more often than not are followed by lower stock prices, and that lower analyst price targets are more often than not followed by higher stock prices. Albeit that these correlations in the positive lags are not substantial and, using formal statistical testing criteria, not statistically significant. So what the patterns that we just saw indicates is in fact that the monthly close can serve as a fairly decent leading indicator of analyst price targets, which is to say that analyst price targets tend to be a lagging indicator of the monthly close. Sure, these are only 4 stocks, although they are from different sectors and follow the same pattern on the cross correlation function. But would you find the same results with other stocks? Well, that would be in line with what I found in previous years, and therefore I encourage everyone who is considering to use analyst price targets as a source of information to decide which stocks to buy or sell, to actually do this kind of exercise and see how in the previous year such analyst price targets have performed for the stock that you are interested in. Because maybe if you do that, you can make better decisions. Okay, that's it for this video. Hope this is useful. And if you have any ideas or suggestions for future videos, you can leave a comment below this video or just drop an email at lappinganalytics.com at gmail.com. Have a good day and see you soon.